Job Curtis, Fund Manager of the City of London Investment Trust. In Q2 of this year, how have UK equity markets performed?
Well, it's been a pretty flat quarter, to be honest, with the all-share down fractionally. But within the market, the large cap, the FTSE 100, did worse than the mid 250. And I think the large cap was particularly weighed down by the commodity sectors, with the oil price being quite weak, and also other commodities. So the mining sector, as well as the oil sector, was weak. And whilst the mid 250 being a bit more domestic, helped by the general election result, and the strength of sterling was a lot stronger.
So how has the portfolio performed in this environment?
Well, we're actually underweight the oil sector and the mining sector. We have consistently been over many years, and indeed in the third quarter of 2014 I did reduce the oil exposure, and we really basically hold now just two oil stocks, which are BP and Shell, which I'm most confident of within the sector context. And we don't want to be out of oil entirely, but we have faith in those two companies, and we've got two of the highest quality miners, that's Rio Tinto and BHP Billiton, are our main positions there. But elsewhere, so we're underweight those underperforming sectors. But we are also overweight mid 250 stocks, and some areas of the portfolio have been doing very well, such as house building shares, and property generally. So overall, we modestly outperformed over the quarter.
Okay, so has there been any significant activity in the portfolio?
I think it's really more been a case of adding to existing holdings over the period. I mean, we've been doing a number of share issues to meet the demand of investors, and so we've taken in new money for the fund, and as a result we've really been adding to existing positions. But within that we still like areas such as house building and real estate investment trusts, are two areas where we've continued to add, and certain sectors which could be where companies could be seen to benefit from the general election results, such as Capita, the outsourcer. We've added to that, which is an existing holding as well.
Okay, now I know it can be difficult, but what's your outlook for the coming period?
Well, the UK recovery has been going on for several years, but I think the economic growth will continue. I mean, with the lower oil price, that is a real benefit to consumers in the UK and in overseas markets. Greece is a small part of the Eurozone. I mean, the majority of the Eurozone is actually also recovering now, aided by quantitative easing in that region, and the US has recovered for a number of years. So the economic backdrop looks quite good. I think there's plenty of opportunities from a dividend yield point of view out there, and so the kind of combination of stocks with above average yield and growth is still out there for us, and so I'm reasonably sanguine looking forward.
Job Curtis, thank you.